did we all miss this?
So it is very surprising. It's somewhere between puzzling and worrisome. Puzzling because it is such a strange number, the 74,000 jobs that were created. Even if you add in the revisions from last month, you're still at half of what consensus was, and it's inconsistent with lots of other data. But it's also worrisome, and I think we have to remember that, because if you look within the report, you get some pretty worrisome things in terms of what's happening to labor participation. We're back to levels that we haven't seen since February 78.
Right.
Long-term unemployment still stuck at 37%. So we're going to learn a lot more. What is the impact of the weather? How much of this is real? How much of this is temporary? But it is a shocker, to put it mildly.
And the fact that it is such a shocker, could it be perhaps something that is just a one-off event that we'll be puzzling over, but does not signal a trend, Mohamed?
I think it's in between. I think it definitely there's an impact of weather that people have to sort out and find out how much of it was due to weather.
Right.
But I think more fundamentally, it reflects an economy that's still trying to gain enough momentum. An economy that's still stuck somewhere between second and third gear. It can drive in a much higher gear and much higher speed and isn't there yet. Importantly for the markets, it reminds the markets not only that the taper issue, although we believe that they will continue to taper, and by the end of 2014, the Fed will be out of the QE business. What it reminds the market is something that the market has forgotten in the last few weeks, and that Bill Gross has been stressing not to forget, which is that the Fed is unlikely to hike rates in 2015. It's more likely to be in 2016, but not 2015. So what you see is the market is starting to recognize that this means that the Fed may be less eager to not just get out of the QE business, but less eager to hike rates in 2015.